recorded by Wood. Call 1-800-453-7800. That's 1-800-453-7800. Please call now. That number once again is 1-800-453-7800.
Did you know that now even the smallest business can afford its own 800 number? Because AT&T has just invented an 800 service so affordable that for only $6 a month, you can have your own 800 number. And with AT&T's new 800 service, you can receive calls from inside and outside your home state, so you can serve your customers better and get new ones. So call 1-800-225-1223 today. AT&T 800 service works over your existing phone line. And if you sign up now, you'll receive up to 30 minutes of 800 calls free. Can your business afford to have an 800 number? For only $6 a month, can your business afford not to? AT&T's new 800 service. $6 a month, up to 30 minutes of 800 calls free. Call today. 1-800-225-1223. AT&T, the right choice.
A portion of Market Wrap is sponsored by the Travelers. You're better off under the umbrella.
Good afternoon and welcome to Market Wrap. I'm Neil Cavuto.
And I'm Bill Griffith. As expected, another lackluster trading day on Wall Street today, due mainly to the Jewish holiday. But there were some unexpected fireworks on the open this morning because of news from the Gulf and from Moscow, which we'll get to in just a moment here. The Dow sold off about 11 or 12 points first thing, but uninspired data out today on housing and the economy seemed to lull the markets back to sleep. However, traders did say they're going to be keeping a wary eye on the Middle East just in case. Here's how we close today. The unofficial numbers from Wall Street, we finish up about a quarter point, but we are even losing that strength here on the close on the Dow Industrials around the 3,013 level. Transport's down about 2.5 points, and the utilities average eking out a small gain today of 0.32 at 207.94. The advances beat the declines by a slim margin with 76 more issues up than down today. 554 issues were unchanged on the New York Stock Exchange. Standard & Poor's 500 index up 0.76. The American Stock Exchange Index gaining about 0.75 points, and the NASDAQ over-the-counter composite index today pretty strong at 3.39 at 518.56.
Well, nothing like a little panic to get the markets going, at least initially. And today, the news came fast and furious on two fronts. First, from the Persian Gulf, reports that the Bush administration had U.S. combat forces in much of the area on full alert. The White House essentially handing Saddam Hussein an ultimatum to allow UN inspections of key Iraqi facilities or risk a U.S. military strike. Then another shocker, this time from the Soviet Union, reports that Russian President Boris Yeltsin had taken ill and was in a hospital recovering from presumably a heart attack. A powerful 1-2 punch that scored the predictable reaction in the currency markets, sending traders scurrying to the U.S. dollar, the proverbial safe haven in times of trouble, dramatically reversing early on what had been a nearly 10% slide in the greenback since the Soviet coup back in August. Here's where the dollar ended the day. Again, after initially strong reaction that had the dollar up better than a yen against the Japanese currency, it finished up a little bit better than half a yen at 134.40 and moving about a penny and a fifth against the German mark at 168.40. Also up about a penny and a third against the British pound at $1.72.82. Well, another safe haven favorite, gold, proved an early investor target as well, heightened by reports that U.S. warplanes were readying for possible combat in Saudi Arabia. The metals today enjoying predictable enthusiasm early on, but that enthusiasm also waned as the day wore on. Gold on the day up $1.90 at $352.30. December silver was up a little bit better than 2 cents to $4.13 the ounce, and platinum enjoying a $1.80 surge to $355.30. And obviously, when you're talking disruptions in the Middle East, you're talking disruptions or potential disruptions in world oil supplies, enough to lift key energy contracts as a result. Here's where we finished on the day, and some of the more representative contracts. Our light sweet crude contract was at last check up 21 cents. We'll give you the numbers momentarily.
In the meantime, it was mixed signals for the bond market today. The situation in the Gulf causing the yield curve to steepen a bit in the morning, as an apparent flight to quality caused prices on long maturities to drop, while short maturities held steady. But those prices came back after the release of the Federal Reserve's latest economic survey, the so-called Beige Book, which termed the current recovery uneven. The survey of the Fed's 12 bank districts showed lackluster consumer spending, a housing sector that continues to lose momentum, and farming output hampered by the recent hot, dry weather. Manufacturing sector, that continued to be the economy's one bright spot in the latest reporting period. The report did nothing, though, to change the market's view that the Fed may have to ease interest rates at least one more time in order to spur the recovery. The 30-year bond, which was down as much as 9 ticks on the morning, then we saw it go higher in the afternoon session. And in fact, at this hour is trading down 3/30 seconds at 102 and 9/30 seconds, and that holds the yield right there at 7.92%.
By the way, domestic U.S. oil today was up 22 cents to 21.84 a barrel. Some stocks in the news today include Transco Exploration Partners. The company says that it has rejected bids for its stake in Chocolate Field in Louisiana, a key well and energy site. The ratings folks over at Standard & Poor's weren't citing that decision for a ratings downgrading, but S&P did slice Transco Energy and unit debt from BBB to BB+. Transco on the day, by the way, was down a quarter at 1 3/8. Another energy concern, discovery giant Schlumberger braced analysts for the worst today. The company advising analysts to ratchet down forecasts for the third quarter because of weakness in Schlumberger's U.S. operations. Up until the company's warning, Wall Street was looking for earnings in the 79 cents a share range. The figure now reads more like the low 70s. Analysts had already cited low natural gas prices and slowing demand for drilling in the U.S. as potential soft spots for the company. Schlumberger officials were not available for comment. On the day, Schlumberger ended up losing 2 1/8 to 66 3/4. Another name under the financial gun, Deere & Company, says it plans to close its first plant in some 20 years. The giant private farm machinery maker will shut down its East Moline, Illinois foundry, which employs about 575 people. A Deere spokesman says that the plant will be phased out over 2 years. The move follows similar layoffs at the likes of J.I. Case Company, a maker of medium-sized construction equipment. On the day, Deere lost 5/8 to 53 3/8.
Bit of a pop on the close here. The Dow finishing up about 4 points. After that, we saw it a moment ago being about unchanged, if not lower. But the market's still somewhat nervous over the situation in the Gulf. Traders saying that they're going to keep a wary eye on that situation. Our guest is Eugene Peroni, First Vice President and Director of Technical Research with Janney Montgomery Scott. He says that we're going to stay in this trading range here. In fact, you see the trading range now with support around 3,000 here on the Dow, huh?
Yes, I do. I think the worst case is around 2950. I think that could prove to be intermediate support down there at the 2950 area. We still have some resistance at 3030, but I think the real key here is that interest rates are coming down and that the market is correcting internally.
That's the thing. There were those who said we should have gotten more of a pop in the markets after the interest rate cuts. They were already in the market, huh?
It was somewhat in the market already, and now people are waiting to see how the earnings turn out. But this is good because it indicates the market is continuing to police its excesses. It's not getting out of control on the upside. We're not really reaching an overbought condition that would lead to a massacre in October, as some doomsdayers are already predicting. I just don't see that.
What's the market waiting for? Better earnings at this point?
I think it's waiting to get through the earnings, yes. But again, many of the corrections that we're seeing now are in individual stocks, and the massacres are in individual stocks and sometimes spread to the group themselves, but it's not coming to the overall market. I think that's very constructive that we're seeing this kind of resiliency in the market. And also, the Dow is holding so well at 3,000 now. That could even be a significant support area.
There are those who say that maybe the bond market's great rise is about done, even though the Fed could ease again. That maybe that's already in the market at this point. If that's the case, is there anything that warrants a higher rise for the stock market if interest rates are going to level off here?
Well, I think the market's looking 6 months out at all times, and that we have not yet seen what these accommodations, this one and perhaps another one, will do to the economy. But I think the economy is beginning to turn a corner here. I don't think there's going to be a double bottom in this recession, as some are concerned about. And I think that the earnings are going to pick up, that the economy is going to become pretty heated by late next year. And the market will anticipate this early next year and rise well into the 3,000s. We're saying minimum 3,200 over the short term, and our longer-term projection means 3,700.
Even so, in the meantime, you remain selective in the stock market.
I think it's, well, even if the Dow goes to 3,700, I think it's important to be selective, yes. But I do think that after we get through this October reporting period, as far as the earnings are concerned and they're digested, we'll begin a broadening market. We've been in a contracting market since late February. I think that's going to change, and that's going to stay with us for about 12 to 18 months.
A couple of stocks that Gene likes. One, Brinker International, which used to be Chili's.
Right, exactly.
Chain, huh?
Building a nice base here at 43.44, and we're looking for the stock to move to 48 to 52 short term. Longer term, it could do even better, but excellent position there in Brinker. I think it's very attractive here at 44.
Okay. You like Green Tree Acceptance into the modular housing there?
Right. I think that the interest rate sensitive stocks are going to do very well here. Fannie Mae, of course, is the blue chip in that group, but Green Tree Acceptance, I think, is going to be a real leader as well. The stock was up pretty well today, but I look forward to continue its gains moving into the mid-40s over the short term.
And you look to some technology here. Unify is an example.
Well, Unify, yes. Unify actually is more in the textile area.
It says here, texturizer of polyester filament fibers.
Right. Well, polyester is in now, so.
Yeah, Neil told me that.
It certainly is in, by the way, the stock has been acting. It's been a good performer over the last 12 to 18 months. It's built an excellent long-term uptrend. We think it's going to be a dynamic stock with good momentum, high beta for the next 12 months. We're looking for the stock to move into the mid-50s over the next 12 months. Over the short term, 48.
Okay, good to see you, Gene.
Thank you,
very
Bill.
much. Gene Peroni, Jr., Director of Technical Research with Janney, Montgomery, Scott, joining us today.
You stick with a man-made Patrick and follow it right through. All right, when market wrap continues, safety on the ground and in the sky as a massive communications outage sparks a lot of concern.
And housing starts show a gain, but building permits are down. What lies ahead for the construction industry? We'll have details coming up after this. Don't go away.
Today's Market Wrap, sponsored by GE. At GE, we bring good things to life.
He was 50 when it happened. In 3 months, he went from perfect vision to almost total blindness.
You know, you never appreciate the beauty in your life until you can't see it anymore. My wife, my family, my life. Everything I cared about just turned to darkness. And no one could tell me why.
In test after test, doctors were at a loss.
I can't find a thing.
There seemed to be no answers. Finally, a test was done using GE's revolutionary magnetic resonance imager. It lets doctors see things that ordinary tests and x-rays can't.